Now, the earnings parade continues in India. Shared workspace provider Awfis is the latest to report Q4 numbers, operating revenue surging 46% in the fourth quarter and a similar quantum for the fiscal year 2025. Their profits rising almost ninefold in the January to March period, and for the full year, Awfis swung back to profitability. Foreign companies setting up shop in India and a thriving startup ecosystem are fueling demand for companies like Awfis. And I'm delighted to say that Amit Ramani, Chairman and Managing Director at Awfis Space Solutions, joins us now to give us more insight into these numbers. Amit, great to have you on Inside India. So it's a solid story for the first quarter, and you swung to profitability in FY 2025. How sustainable is that picture for FY 26? And do you see any challenges to numbers like that and that pace of growth next year?
So I think clearly, last quarter of FY 24 we turned profitable, right? And we have continued to maintain that profitability all through the year, all along in all the quarters. If you look at the whole industry, I think it's done extremely well, from 16 million square feet in 2020 to almost touching 80 million square feet today. That's the flex market in India. So obviously the macro has done well. I think India has overall done well as an economy over the last few years. India is a completely under-commercialized market, and flex is solving a big problem, and hence has grown at 20 to 25% almost quarter on quarter. And so we feel that this journey will continue, and FY26 we don't see any challenges. As we gave our guidance yesterday, we look to grow at about 30% for FY26. And almost similar level of seat capacity we should be able to add. We added about roughly 39,000 seats in FY25, and we should be able to match that in FY26 as well.
Yes. Amit, for our viewers who may not be familiar with the ecosystem as it applies to India, Awfis is India's biggest flexible workspace solutions provider. Just give us a sense of the potential addressable market in India and why co-working spaces are in such demand.
So overall, India commercial market is about 860 million square feet today. Over the next few years, in the next 2 to 3 years, this would touch almost 1 billion square feet, right? As I mentioned, this year we did about 16 million of new stock was added in flex, which is almost about 20% of the overall 80 million gross leasing that happened. Now, to give you a comparison, all 6 boroughs of New York City is about 450 million square feet, and all of India is about 860. So clearly, it's a very under-commercialized market, and clearly finding space, quality space, is a challenge. The complexity of setting up infrastructure, a good infrastructure in India, is complicated, and hence flex is solving that need. Today, if you look at it, it is basically coming along because of the distributed work that happened post-COVID. Clearly, flexibility. You can take as many seats for as long as you want, and the ease of use, right? You can easily get it. In case of Awfis, the other piece that works really well is the network. Today, we have 210 centers that are operational across 18 cities in India. Almost 100 plus micro markets are mapped with us. So you can find an Awfis location in the top 7 tier cities almost in a 10 to 15 minute driving radius. So hence, it's solving flexibility, it's solving distributed work, it's solving scalability, and it's solving accessibility.
And is the asset-light leasing model one that is working out for Awfis, Amit, at this point in time, or would you consider shifting some parts of the business to an asset ownership structure? Does that work, and is that appropriate for some cities and markets within India?
So we are an asset-light business, right? And hence our return on capital employed is almost 62% for the year. For the quarter, it was 76%. And we believe that this model is probably the only sustainable model going forward. Almost 67% of our portfolio today is in what we call as managed aggregation, which is basically an asset-light model where our landlord partner is investing majority of the capital, and then we do a profit share with them. As we go forward, this ratio will continue. We will not get into any asset-heavy business. We are akin to an hospitality play, right? I mean, we are a day hotel. And from that perspective, I think it's proven in the hospitality space that this is the only model that works, right? This is the only model that's scalable. And hence, in the last 10-year journey, we have been able to get to about 200 plus locations in a very short span.
How would you rate the competitive challenge from WeWork, which is your biggest rival, Amit? And what are the USPs that give Awfis the edge?
So we clearly have a few differentiators. One is the network. We have the largest network by far in India when it comes to the number of centers, number of seats, number of cities. We also believe in a much smaller format. So typically our centers are about 30,000 square feet, gives a much more community feel. You are able to have a more community approach to the whole thing. Very strong focus on our customer diversity. Today we have 3,000 client companies that call us home. We service less than almost 45% of our portfolio is less than 100 seats, and rest is more than 100 seats. We service every type of customer. We have 3 flagship brands. We have the Awfis brand, which is about 85% of our portfolio today. We have Awfis Gold, which is an Awfis Elite, which is basically the remaining 15%. So we service every price point. So it's like a Toyota Corolla, Camry, and a Lexus in the market, and hence we are able to address size of the cohort from 1 seat to 1,000 seats. We are able to address somebody who needs a $100 seat and somebody who needs a $250 seat. So I think those are the main diversity, and clearly the customer experience. I think because of our strong hospitality focus, the customer experience that you get in our centers is at par with any global operator.
Amit, can you tell us where occupancy rates stand? I understand that they're close to 75%. And what expansion plans do you have in mind? And how many offices do you plan for the current and the next fiscal?
Sure. So current occupancy is roughly, as you said, it's about 73%. And I think stable state, which is more than 12-month-old centers, is about 84%, which we look at as our stable state occupancy. As I mentioned earlier, we would look to add about the similar number of seats that we added in FY25 for FY26. And this space, we believe, will continue to help us keep our center at the similar level of occupancy. As an example, we sold in FY24 about 37,000 new seats. In FY25, we sold about 53,000. So obviously the pace of seat addition has kept up with new seat sales as well. And we look to continue to that momentum as we go forward.
And are Tier 2 and Tier 3 cities on the table in terms of expansion and next steps for Awfis?
So we are currently already in 8 Tier 2 cities. We will add Vijayawada this year to get to about 9. Tier 3, we don't believe is an opportunity, at least for the next few years. And I say that because of primarily compliance supply available in Tier 3 cities, right? So as long as we have compliance in terms of supply availability, we will expand into that city. And we believe the 9 cities that we are in today is where the future of India from 4 trillion to 10 trillion economy is going to be written in addition to the Tier 1 cities, but no plans for Tier 3 cities right now.
If the expectation, Amit, is for more multinationals to set up in India, and that's all to the good for Office Space Solutions, then are you basing that on the conclusion of some landmark trade deals between India and the United States, of course, and the European Union? UK, India is already in the bag. To what degree are these agreements are going to be drivers of international capital and international investors into India, and how much of a virtuous circle do you think that's going to create for Awfis?
So clearly, as I think the trend is being seen even before these deals were announced, right? If you look at the global capability centers that over the last 20 years got to about 1,800, and the next 3 years are going to get to about 2,500 of these are going to be set up from 50-seater to 5,000-seater centers. All of these plans have been announced. We have been very fortunate to be able to address a large part of that market. We have set up Elite, our premium product, exactly for that. We have companies such as Meltwater, ABC Fitness. We have Zenov, which is a large GCC consulting firm. They have set up shop in our centers. And we feel today that this demand, in addition to the outsourcing continuity, India offshoring, which is already a large part of our portfolio today, will continue to drive demand in India. And, we feel that overall the landscape for India is very, very strong because the macro factors are strong. Commercial activity in terms of provision of great supply is available at least in Tier 1 and Tier 2 cities. And that will allow people to come to India to set up these large centers. And as they set up these centers, we are clearly one of the choices that they would have in the country.
I mean, if rents are soaring in the big urban centres in India, then how do you make the pricing environment appealing, competitive and affordable for your clients? There must be a fair degree of pressure to increase the rates that you charge.
So clearly that has been there. I think, rents have gone up, but even when you look at the overall landscape, they have gone up by about 20% overall, if you look at the overall macro numbers. And currently it stands at about 85 rupees per square foot, roughly, which is about $1, right? The reality is over the last 10 years, it has continued to remain in that dollar range, right? It's just that the currency is depreciated. So from a global standpoint, when they look at these markets, the rents are almost same, right, over the last 10 years. And, clearly the demographics gives the advantage because almost about, I would say, 70% of the cost is towards the manpower, right? And the rents essentially are between 10 to 15% of the overall economic. So I think from that standpoint, India continues to remain a choice for a lot of these large multinationals who are looking to get work done. And clearly towards even the GCCs today, where earlier it was about BPO and KPO, today complex tasks like research and AI are being done in the country. So I think the demographics have moved and the rents, I think, are continuing to remain in a very affordable range.
It's interesting you mentioned the AI build-out, which is arguably in a nascent stage. Is there a theme that Awfis can perhaps latch onto? And are there, I mean, we can talk about Bengaluru and that being a very well-established IT hub, but are there other potential Silicon Valleys in India that you see arising that represent opportunities for Awfis?
So I think clearly Bengaluru overshadows everybody, but I think the reality is if you look at today the global capability centers that are being set up, a lot of them are happening out of Hyderabad. Pune is another big market where we see a lot of GCC traction happening. A lot of companies, global multinationals are also expanding and setting up their centers in these locations, including places like Navi Mumbai sees a lot of traction today. And then for certain SaaS and product-based companies, Chennai becomes a great market, right? I think so. I think we see these top 4 or 5 markets continuing to grow, and obviously Gurgaon and Noida are already established as those markets. So I think the top 6 markets, I believe, are all very, very capable for all of these different tasks to be done out of India and have the supply available today for them to be absorbed.
I mean, you've clearly got your hands full with the Indian market, and it's a huge potential addressable market for flexible co-working spaces and solutions. But do you have any plans at this stage for expansion internationally, either within the South Asian region or even beyond?
So I think I would just keep it simple. I mean, from our standpoint, we believe the opportunity in India is so large that moving into any of the other markets is not on the cards currently. We are very clear that we have a market leadership position in India, and we want to continue to maintain that as we go forward. And from that standpoint, currently no plans to be outside India.
Understood. And if we can put up a chart of your stock's performance since the IPO in May last year, it's up by some 60%. What has this listing and the capital generation, the capital formation that it's enabled, what has it enabled you to do that you would not have been able to do otherwise if you didn't list?
So I think clearly, I think credibility goes up. I think the trust in the business goes up from a business standpoint, client standpoint. I think a lot of our teammates that had the stock got 1x to 50x of the yearly salary, which we are extremely proud of. As a business, we were extremely capital light, right? I mean, we raised about 130 odd crores towards primary capital into the company. I think so clearly, I think our trust went up, our ability to attract and retain better talent went up. We added a whole bunch of leadership team in the last 6 months. And it's obviously given an exit to our original shareholders, which were investors with us, and obviously a great outcome for our teammates. So I think all of this put together, I think net was a great move, and we were one of the first ones to successfully list in the co-working space globally. So extremely proud of that fact. We are almost at their 1-year anniversary today, and the stock has done well, and we are extremely proud of it.
Amit, we'll leave it there. Great insights into the co-working space in India. Thank you very much indeed for joining me on the program. Amit Ramani there of Awfis Space Solutions. Now, before we head to a break,